Okay, welcome everybody, guys. Welcome to our Wednesday edition live. I'm going to be analyzing, spending time with you in the markets and discussing everything pips and more. Now, we are trying a little bit of a new bit of software today that's streaming across Facebook, YouTube, the different pages, the different destinations. So again, I have a little bit of visibility of the chats. My biggest concern is the quality of the stream. So just let me know where in the world you're joining us, wherever in the world. I want to know city, and I want to know where you're at. Are you at home? Are you at the work? And hopefully nobody is driving and watching the stream. If you're doing that, it will be available later on. So I watch me a little bit later, and we're going to have some fun. So just drop in the chats. The more I see those chats busy going on, you're welcome to ask questions, you're welcome to chat. I can see a combination of Facebook and YouTube here all together, so you guys are welcome to drop those chats and I'll reply to each and every single one of you. I can see Laugh That Hard is in the house, Daniel, Steve, Kunene, Guvan is in the house, Tandi Leone, I see a ton of people in the house, Tumelo, Hamans Kroll, welcome, Pretoria is in the house. Let's see, we got some more people from Pretoria, Blantyre, Malawi. Let's see, Steve is also from Malawi. Beautiful, guys. We're about to have an awesome time. We're going to jump into the markets. Also, let me know how's the stream coming through for you. If you're on YouTube or Facebook, I'm super interested. Listen, if anybody knows the CEO, the ownership of the company called Home Connect in Southern Africa, let them give me a shout, because their service is absolutely rubbish. I've got 100 meg fiber link here at home, and I'm streaming right now through my phone because their link cannot connect or has problems. So big shout out to MTN. Anybody out there, just hashtag MTN right there. But yes, Home Connect, wow, you've dropped me in a big way. But hey, we'll continue doing what we're doing. People saying the stream is perfect. Beautiful. Botswana in the house, South Africa, Lusaka, Zambia, Polokwane. Beautiful. And I see Bugs Bunny. That can only be a Mr. Mark Hooper. Let's just see that. There we go. That is Mark Hooper. Beautiful, guys. So as always, we're about to have an amazing time together. We're going to jump into the markets. We're going to be doing some really cool stuff. I prepared quite a bit of content for this show, and we're going to be able to dive in, talk about what's happening in the world right now. There's a few topics that are obviously dominating the markets in the world and the general discussions, and so we're going to jump in that together and run through what do you need to know to be positioned in the financial markets. There's some trades I'm looking at. If they present themselves, I'll take them live with you guys. We'll obviously discuss why I'm doing what I'm doing, so on and so forth. So I think without further ado, I'm not going to be able to see messages. So anybody's messaging me on any of the DVDM market groups, I won't have visibility of that, but I will have visibility of the chats right here within the streams, whether you're Facebook, YouTube, whatever it may end up being. Now, first and foremost, let me state up front, if anybody is confused as to what it is we're talking about, whether we're doing fundamental technical analysis or we're talking about any instrument or commodity, if you want to learn more about that, I've released the Quantum Growth Markets series for free on YouTube, and you can just go to my YouTube channel and go ahead and watch that. It's about 8 hours of everything you need to know about the Forex and financial markets, and the best part is it is absolutely free. So you can go ahead and enjoy that at the comfort of your own home anytime you wish. You can go ahead and watch that. You obviously need data. So when I say it's free, there's a few people turn around and said, but I need data. You need data, guys. Listen, you need data. Like if you don't have data, you're not doing anything. So you bare minimum need some data. So without further ado, if you guys are ready, I just want to check the chats really quickly. Who's where? Facebook, Pretoria, stream is perfect. South Africa, what's happening? Hein, Vincent's in the house, Henry's in the house, WG, Paco, Tandi. Yes, beautiful. We have a full house today, and let me know what do you guys think about the music. As always, I know you guys appreciate the music, and I put a bit of time to make sure it's something at least you can vibe to, whether you're watching this later or rewatching, whatever it may end up being. Listen, if you're a DVDM master student, please put a massive thumbs up in the chat. I just want to see where my master students are at. I can see Gilbert's in the house, master students, Double D, I'm not sure what that name stands for, but yeah, Leone is a master for sure. Tandi's a master. So if you are a master, just drop in the comments that you are one of my master's students. So guys, listen, we're going to have a great time this afternoon. We'll be covering a ton of information in a very short period. But again, as I've said, you are welcome to rewatch this at any time you wish, right? So you can rewatch this later at your home, wherever. And I'm gonna speed it up. Obviously, you guys want to get to the trades. There are going to be some things that are going to be popping off at 2:30. So I'm gonna speed it up. You again, welcome to slow it down, watch it at your own pace and at your own time. So I think without further ado, guys, let's just jump straight in. And what we're gonna do is start off today, as always, with some of the fundamentals, some of the calendar information that's going to be popping off in the next couple days. We also have NFP this Friday, and I'll give you some guidelines of what I think is going to be end up happening there. I will be trading this Friday NFP live with my master's students. So if you're a master, again, with masters, we live Tuesday, Wednesday, Thursday. I'll be adding Friday to that calendar, so as that data comes out, we can take some positions on the different assets and commodities that are affected by the dollar. Without further ado, let's jump in and have a look at the economic calendar for today. So we've had a little bit of a crazy week, guys. You guys saw last week we got South African unemployment rates, and listen, just side note, you have to love the South African rand, right? The only currency in the world where we get the highest unemployment rates we've ever seen in our history, and the South African rand sits there and thinks, okay, what do we do with this information? Do we get weaker or do we get stronger? The highest unemployment rates we've ever had, let's get stronger, right? That's what the South African rand does. And if you guys have been through my academy, I have made a caution or note against South African rand. It does the opposite of what it fundamentally should do. And that's just, for a bit of information, you got to have a bit of a giggle. We will cover that as well. I do think there's going to be an amazing opportunity coming very, very soon on the South African rand, so we will be covering that. Guys, if anything happens to the stream and we disconnect for whatever reason, it will reconnect and it will maybe potentially launch a new live video. I don't know how the software reacts to disconnects. If it happens, again, I'm pushing the whole stream through my phone at this moment, so just bear with me here if we do get disconnected. But all right, let's have a look at what we're seeing in the markets. The total vehicle sales for August, there was a 33,000 in terms of these vehicle sales. Previously, we got a 41,000. So that's obviously showing a pretty big increase in vehicle sales. Same thing in terms of percentage for the year on year for August. So August last year, we're seeing a 24% rise in vehicle sales in SA. So good data, right? But I'm going to show you a little bit of the negative data that we need to potentially look out for. And this, I believe, is... you're going to see on the charts when we get to the pure price action side. I think I know exactly why we're getting this positive data. As always, I think we're looking at a little bit of a bear trap here on USD ZAR, but we will talk about that. There's going to be some volatility on the euro. We got some German speeches that are happening, and these things can be very anytime you see somebody of influence speaking about a country state, they always want to reassure and always want to obviously speak to the investment mindset of foreign investment, and you'll see a lot of volatility as soon as you see any president speaking about a state of the nation. Any of those things, you'll see that type of volatility. Nothing expected to come from the German camp that is unexpected, but definitely volatility on the euro. So you can just watch out for that over the next 15 minutes. We are getting that right now. We are going to start to see some of the non-farm employment rates coming out, but again, the real NFP is the first Friday of every month, and that's going to be happening tomorrow. On Friday at 2:30 GMT +2. Otherwise, if you're in the US, obviously start with the US markets, you're going to see that data. Again, I'll be trading this live with my masters. The one bit of information we are waiting for from today, specifically on the dollar, is going to be this ISM manufacturing PMI today, right? Now, we are expecting a slightly underwhelming result from the previous PMI. We got a 59.5, we're expecting a 58.6. So slightly unexpected. If we get a better than expected, so standard deviation of more than 2% or 2.5% here, if we get a PMI of higher than 60, we could see that being a really positive boost to the dollar. And I do think we're going to get some really positive data potentially this Friday on the dollar. The dollar is positioned keenly, and I'll go through the dollar index of why I think that the price action backs that up, but we could start to see a bit of these numbers dribble in today. So volatility at 4 o'clock GMT +2. Outside of that, we also have crude oil inventories due at 4:30. Crude oil is going to affect the dollar, right? It's going to affect gold. If you don't know what I'm speaking about, there was a session I did about 2 weeks ago talking about the correlation between gold and oil, right? In terms of how they move. When oil appreciates or oil starts moving, it tends to affect and have a positive knock-on effect for gold. Not always, not tied into stone, but you can go and do that by overlaying your gold charts as well as your crude oil prices, and you'll see that symmetry in terms of how they move together. Looking into tomorrow, we have a fairly quiet day tomorrow, specifically in the morning, and then leading up into Friday, we're going to start to see a ton of US and Canadian data, as we generally see before all the NFP releases on Friday. So tomorrow is going to be a great opportunity to spot volatility on the dollar and the Canadian. However, the dollar is going to be slightly more dovish in its approach, waiting for the NFP on Friday. So if the dollar starts to feather out and almost seem like it's not moving, remember that is normal. The dollar will feather out and really wait for that unemployment data. And for those of you who don't know what NFP is, it's simply the employment change, how many people are employed, how many people are unemployed in the country. Obviously, the more people that are employed, the higher contribution towards gross domestic product, the better an economy grows. And that's just a general good indicator for a currency or for a fiat-based entity. Okay, so employment is a good thing to spot and monitor for the future, and the dollar really needs some positive backing here. Again, we're going to jump into the charts and I'll show you why it is that I do believe that. Now, we are going to move into some charts. Before we move into the charts, I just want to double check with everybody in terms of the chats. I just want to catch up with you guys. I'm a little few chats behind here. Seeing chats here from Frank, Joseph. Yeah, guys, if you want the playlist, I can definitely let you know where I get all my music from. It's copyright licensed stuff. You basically have a subscription for online. You can download as much of it as you want. Absolute necessity. Let me tell you what it's actually called, Epidemic Sound. So if anybody wants to go and grab this kind of content, Epidemic Sound is where it is at. You pay a tiny fee and you get a ton of really great music, and you can use that in your videos, in your streams, whatever it may be. So that's just answering that question. Paul's asking, how can you be a master student? Well, you first need to be in DVDM markets, and then any of the admins there will assist you in terms of how to get to master's level. Jason's saying turn it up. Let's see here. Josh is a little bit late. Welcome, Josh. Welcome, Josh. Joseph says welcome, Josh. All right, so we're all on the same page. Now for the part that everybody is waiting for, and let's just jump in straight into the markets. Now, I'm going to jump off and start with Bitcoin, and for this I'm going to be utilizing TradingView. Guys, if you don't know my previous Bitcoin analysis, you may want to go back to some previous videos in terms of what is going on here. But really, this is what the world is busy speaking about. Now, before I get into the analysis, I want to show you the talking points that the world is busy discussing right now, and things you really need to be abreast of if you're participating in the financial markets. And also, just to be clear, guys, there's two schools of thought here, right? There is traders who are purely technical, price action, algorithmic. You're purely looking at what's happening in the chart with zero regard for what's happening in the outside world, and that's generally in the camp that I fall. But there's also a healthy experience in understanding what's happening in the world, right? You need to know what's happening in the world, right? And so pulling in these fundamentals of an economy is good to know, not to swing or give you bias, but rather to have an understanding that at any given place in time when this topic is being discussed, you are in the know. Also, if you are thinking of taking Forex and making it part-time, full-time, you don't want to ever get into a discussion with someone where they're speaking about blockchain technology, and you've got zero idea of what's happening in the world in terms of the regulations and the all these other things. So it's just good and healthy for you. You could never go wrong with adding to your knowledge at the end of the day, right? Beautiful. So let's just talk about the couple things that the world is busy speaking about right now that is extremely important. And we're going to start local home, and then I'm going to get into the charts and into what's busy happening, and this will kind of help you understand a little bit about that. But pretty much at home, everybody saw everyone's freaking out about this new variant that's been discovered in South Africa, and they're really trying to understand, you know, how contagious it is, how it transfers, all of these kind of things. There's three main talking points in the world right now. It's coronavirus globally, with the coronavirus local opinion obviously being this new variant. We have the US withdrawing from the Afghan war, and we obviously have cryptocurrencies in terms of their regulation, in terms of their future in the world and in our economies. Now we're going to touch on these couple items, right? So in terms of this new COVID variant in Southern Africa, I do think this is going to have a negative risk offset for the South African rand. Now we got some good vehicle data sales, but I believe this, with the combination of unemployment data, it's not to say that the rand does opposite of the fundamental data. Always. It's not that the rand is going to go to the moon based on unemployment data or bad employment data. There is just a little bit of a delay. So that delay is anywhere from a week to 2 weeks up to a month, right? From a week to 4 weeks is where that delay sits. And this is what we're just going to start to potentially see. And when we talk about USD ZAR on the charts, I'm going to show you why I think there's going to be a turning point, both from a price action perspective as well as bringing in some of these fundamentals trickling in, what we call a perfect storm, right? So it's just important that you are well aware that there is this new variant, and you know the rest of the world is obviously quite worried about that. And when we see a new variant, as we've seen before in Southern Africa, what tends to happen is first world countries start to shut down those travel routes to SA. So meaning travel, business, a whole ton of other things start to become a little bit more difficult and will aid to a little bit of the strain that the South African economy is currently facing. So those are the knock-on effects that we want to obviously be aware of when we speak about these kinds of things. Now, the other big item that is a massive talking point is the fact that the US has now fully withdrawn from the Afghanistan territories in terms of their troops, their support in totality. Now, this is a bit of a knock-on effect, not because of what has been done, but the approval rating for Biden has literally just taken a little bit of a dip and a little bit of a turn. I don't know if the graph is present here. I don't know. I saw it last night, but the approval ratings for Biden's administration has officially gone into the negatives, right? So there's more people that disapprove Biden's administration and the decisions that have been made versus those that are supportive of that. Now, again, anytime you have these political instabilities or these differences in opinions, all the other things that the US is trying to achieve in terms of the vaccination process, in terms of driving these stimulus packages, in terms of all these things, the more opportunity there is or disapproval or approval in a particular administration, all these subsequent tasks become more difficult. So the US really needs a win right now, and this is why I'm saying that at that teetering point of, you know, looking at, will the dollar gain some strength? And obviously if it doesn't, there's a major downside opportunity should that not happen. We want to be fully aware of that, and we're going to be in a position to trade that. I'm going to take you through that as well in quite a bit of detail, but these are just items you obviously need to be aware of. Okay, let's also talk about, yes, all right. So in terms of the crypto markets, right, we have no doubt that cryptocurrencies are here to stay. The underlying blockchain technology is definitely here to stay. Its involvement and adaptation into all walks of life is exponentially being, adopted across the board, right, from a blockchain perspective. However, people are now saying that, listen, for this to last and for it to stay, there requires more regulation. Now, the appeal of cryptocurrency, right, that people just understand, the appeal of crypto in general is the fact that it is decentralized, the fact that it has some anonymity to it, right? You don't know who's doing what. Now, yes, there's some negatives in terms of crime that happens through that, but ultimately these are the these are the things that make cryptocurrency such an exciting thing. Now, what you're going to find across the world, and for people who don't know, you've got two schools of thought, right? Either the cryptocurrency evolution or revolution is being fully embraced and is allowed to operate. Germany's taken a very powerful stance. There's other emerging economies that have absorbed cryptocurrency as their localized national currency. Those economies are being forward thinking. The US is kind of sitting in between where, they're allowing it to survive, but ultimately they want the cryptocurrency itself and the blockchain technology to be regulated, to understand and have an identification of who is doing what with their money, ultimately for purposes of taxation, right? A country will not stand by and watch hundreds of millions of dollars, if not trillions and billions and trillions of dollars moving without, obtaining their tax on that particular item. So that's the two schools of thought. South African government, in our particular case, has basically said if you're a South African citizen and you own a foreign, if you own a crypto outside of the country, it's basically considered illegal currency, right? And there's no local exchanges that are approved because there's no local exchanges that are willing to share information with the South African Reserve Bank and SARS in terms of their clientele and what's being moved. So this will continue to be a fight. And when we start to see these breakthroughs, I think then you're going to start to see crypto not only become completely mainstream, but widely adopted across the board and used in every area and space. So this is really, if you want to keep your ear to the ground on crypto, it's definitely going to be two things, right? The adoption into a regulated state, which ultimately has to happen. Countries will not allow it to thrive and prosper without some sort of regulation. And B, the introduce where it's exchangeable for a broad variety of services, like we saw Tesla accepting Bitcoin as a form of payment. The day that you can walk into Woolworths and buy your shopping, fill up your car, transact on a daily basis with a type of crypto, that is where we will see that massive wide adoption. But, and there's a big but, this threatens basic fiat-based currencies, right? You guys will see in the group, the DVDM markets group, that I forwarded that link of people only now starting to figure out what happened 50 years ago with the delinkage of gold, where the United States dollar was no longer transferable against gold. People only now figuring that out and the repercussions, and that fiat-based system has stayed intact ever since. Crypto threatens that system, and you need to understand that. So these are going to be the things you have to watch out for crypto to become exceptionally mainstream. There's a lot of big investment firms that have basically said and predicted that Bitcoin itself will hit $100,000 a coin before the end of this year. So certainly a massive upside, right? For those of you who remember, I called out that $30,000 buy on Bitcoin. But before I speak too much about that, let me just jump into the charts and show you. There's a bit more news here, but I've spoken obviously a bit too much. And so we're obviously going to just jump straight into the charts. The last thing I want to just chat about is obviously oil. The world is obviously wondering what is obviously happening with oil. And the OPEC has essentially raised its expectation on oil growth and or demand for 2022. So even though we're seeing a ton of green energy and we're seeing a ton of EV or electrification of vehicles, there still is a forecast for oil demand to grow. That is good for gold. So that's just something you want to keep in the back of your mind. Okay, now moving into the markets themselves, and this is obviously what everybody has been waiting for. Let's talk about Bitcoin, right? Let's talk about Bitcoin. Now, I've spoken about this. If you haven't got the full analysis or the full history of what's happened on Bitcoin, you're welcome to go to any of my past streams, right? We did a massive Sunday, I don't know if we covered it, but we did an analython. Don't Google that thing. We did a analysis marathon. Don't Google that. We did an analysis marathon on Sunday. We covered, I think there's a bit of a history in terms of Bitcoin and its price. If you don't have that, don't worry at all. Essentially, I want us to focus on merely the impulse move we got from October 2020 and that subsequent correction down to that 61.8 golden retracement ratio. Again, if you don't know what's going on, go ahead and go to the Quantum Growth Markets Academy. everything you need to know. Fibonacci, technical analysis, my personal strategy, all there ready for you to view and go through the whole series, guys. If you're a trader and you think you know what's going on, please start at the beginning. Don't skip the history, don't skip brokers, don't skip that. Follow the process. It's been designed for your learning journey. I've trained thousands of people around the world, and it's there for a reason. I could have just skipped and said, this is how you trade, but I didn't, and there's a reason for that, right? So ultimately, that pullback down to that 61.8, and then that impulse move. Remember, the $30,000 a coin is where I called it out, that this is where, if you want to buy Bitcoin, that's where you need to be. And we pushed a little bit through that 30,000 mark, nothing that a stop loss would have taken, but ultimately we settled on that support on still technically 30,000, but down to $29,000 a coin. And then we see we got that nice healthy impulse. Now, what is interesting about the impulse is we're now starting to break out. This is on a daily time frame. I'm going to switch it up to a 4-hour time frame, and you can see that impulse we're now starting to have fallen out, but we are resting on support at this moment. Now, there is no reason why Bitcoin should be losing value now or volume, right? There's still a ton of volume in the market. There's still a ton of opportunity for Bitcoin to be long. So there's two fundamental opportunities that we can map out with the current price of Bitcoin, right? Ultimately, you want to be long in Bitcoin, right? It's the same as NASDAQ, it's the same as S&P 500 at this point. You know, there is zero downside forecast of why Bitcoin should lose value at this particular point in time. There's only a topside forecast. So ultimately, we want to understand, is this going to pull back, or are we looking at support and a potential just, you know, bear trap that, you know, Bitcoin's kind of just holding out on. So the important thing to then obviously understand is, off this support area here, this $46,600 to a coin, this is ultimately still a good value proposition for a long position. However, as we break this price down, we're going to start to see, and I'm just going to drop, I think, straight into an hour. Okay, you're going to start to see we're going to have some price action here that's really going to help us to understand at what point will this breakout happen. Okay, and we're going to have multiple levels here we can potentially map out, and I'll show you how we deal with this breakout setup. I would say the absolute tolerance is going to be something like that. So I would do this two ways, right? If we break out of the structure, again, this is a 1 hour. So should we break out of the structure, it is an absolute buy without even thinking about it, right? There is a smaller structure you may want to map if you're the type of person who scalps, and in your particular broker, you have decent-ish spreads. Remember, Bitcoin can have a pretty rough spread. That's why a lot of brokers aren't supporting it right now, just due to the pure volatility. You can go down to a 15-minute, and I want to show you something cool. So again, this is the bigger structure we just mapped out, and on a 15 you are going to start to see that we have an opportunity to map this guy out like that. Okay, so on a 15 minutes, essentially Bitcoin right now, provided this channel continues, we should see a little bit of a sell-off down on Bitcoin, and ultimately we want to obviously see, do we get, you know, further down on this channel? But a breakout of this immediate channel would then trigger, or at least give us an opportunity to get into a buy or into a long position. Inversely and oppositely, right, markets can go up and markets can go down. It's all about timing and entrance, right? When do you get into that trade? Ultimately, should we break out of this market structure here, right? This can be considered a little bit of a flag formation, right? So a flag, or potentially, I don't see much of a pennant here, but ultimately, if we break downside, right? So if we get below the $45,000 a coin mark, there is a massive short opportunity that still exists that we could also take advantage of. So where she's sitting now in this range, right, nobody wants to, unless you're a scalper or you specialize in sort of taking these smaller trades, you may have an opportunity to sell now and potentially take your profit. I would say selling now at about the $47,000 a coin mark, take your profit about 45, or at least at support, that 46,700, and then potentially look at obviously getting long. And again, once we break out of this little sideways market, again, the potential for Bitcoin to hit $100,000 a coin is definitely there. Now, $100,000 a coin with leverage, and obviously with all the factors that you get in dealing with a CFD, which is a contract for difference, you don't own the underlying coin, means leverage and all these other things, means that Bitcoin does $100,000 to a coin, guys. Even at 0.01, you're talking about making a ton of money. So Bitcoin is definitely one you want to watch, and is something I don't think we should miss or be asleep behind the wheel for. The next one I want to talk about now is I want to talk about gold and the price of gold, and what I think gold is up to, and what I think gold is going to be doing over the next couple days. So again, we've been dealing with gold quite a bit over the last couple days. Let's just see here why this line has moved. That should be somewhere around what there. Okay. So we've been dealing with gold quite a bit over the past couple of days in terms of what she's been up to, and we've mapped out this last impulse, and you can see the difference between this impulse here and the subsequent correction. Very, very transparent, if you will. And we came back down again once to the 61.8, our golden retracement ratio, and then we've broken out, but we've now started to not only retest multiple times this breakout, this new phase. So gold has positioned itself for a next leg, for a next season of impulse towards the top side. So gold is positioning to go long, right? Now, in order for gold to go long, we obviously need to understand that would mean that the dollar decreases in value, right? Because obviously as the dollar gets stronger, XAUSD falls, right? As the dollar gets weaker, XAUSD rises. So gold is positioning itself for a dollar weakness, or a season of dollar weakness. Now, we need to be quite cautious of that for this particular reason, that once this consolidation or once this retracement had come to an end, you want to see a nice healthy impulse, and a healthy impulse with correction, no issues, but an impulse with correction that is continuing to make lower lows tells us that the impulse is broken, yes, or the impulse happened, yes, but gold doesn't have the legs to make a higher high, or to, you know, breach that $2,000 per ounce of gold. So we're definitely seeing some weakness on gold right now, but you will see that from a technical perspective, we've kind of broken out of this channel, right? Which is where I think we're going to see a ton of volatility this Friday, right? Because everything is on the cusp of breaking. Let's just see the chat here really quickly. No, guys, don't Google that thing. Please don't. Let's just see the comments really quickly. Tisetso, welcome, my brother. Prophetic Dancer, I don't know who you are. Tundi, welcome. Jason, don't Google that. Don't Google it, Tundi. Don't Google it. Please don't Google it. Beautiful, beautiful. I think gold long is confirmed by long-term trend. Remember, my charts are at home. Yeah, so this is something that I've paid a little bit of attention to, and this is where I'm coming up with a little bit of a different theory, right? So let's switch over to the charts really quickly. Right, now this is gold. Let's go back to a daily, and this is on my particular chart. Yes, there's a lot of things going on here, and we've been buying and selling gold, and we've been having a ton of fun. I want you to have a look at this. So here's that same structure. Here's that little bit of a so there is the correction down to the 61.8. Here is the impulse breaking topside outside of that correction, and then we, you know, have failed to do anything impressive on gold. Now again, with that failing to do anything impressive, we now have that moment in time where we've broken out of this channel. Now, it's also important to state that we have a long-term support level here. I'm going to go to a 4-hour. No, it's not going to be enough data. Okay, so it's also important to state that we have these support levels that we definitely tested last week, right? Not last week, apologies. The 9th and 10th of August, we made that massive spike down to and or through support, and we've now utilized that to move into this next state, or this next space. So now let's zoom in and let's have a look at what I think is going to end up happening here. I'm jumping in on an hour, and this is what I'm currently seeing here, right? Now, as many of you will know, when it comes to the dollar domination side of things, I'm looking for a potential short on this particular setup here, right? We've made these little pushes down, right? And the rejections that we've made here aren't ideal, not great, but I think we're ending up with a little bit of an expanding formation, something of that nature, which is where I'm looking for a potential sell or short opportunity on gold right now. So for those of you that know the dollar domination strategy, we start to see massive periods of volatility, specifically either 2:15, 2:30, or 3:15. Now, as an extra bonus for every single one of you out there that love trading gold, I'm going to give this away absolutely for free. Just go down to a 15-minute time frame, guys. It's not rocket science, and go and have a look at what time you see the most volatility kick off and happen when it comes to gold. And you're going to see those are the two variables, either 2:15 or 3:15. And I'll just say it's a pleasure, you're welcome, and I'll assume you're saying thank you, so I accept that thank you up front. That's just me being cheeky. Anyway, hey, welcome Alex, thank you for joining the stream. Listen guys, okay, before I jump in and share any more, I need you guys to do some sharing, right? So I'm looking for you guys to go ahead and share this stream. There may be somebody out there that wants to trade, has been dying to trade, has been trying to trade and struggling, but I'm looking for somebody to go ahead and share the stream right now, wherever, whatever socials. If it's on WhatsApp, I'll just trust that you've done it, because if you haven't, you know what happens, right? So you're gonna get 5 years of bad luck or something like that. I don't know. Just assume it's not going to be good, but go ahead and share the stream, and I'll continue what I'm thinking on gold, and we'll potentially take or benefit from this trade together. So let's just see here. I just want to, if you've shared, just drop in the comments that you have shared it. I cannot see if you've shared it, so I'm just going to have to take your word for it. But 2 minutes, 2 seconds, I'm going to let the music come in and let me know once you've shared it, and then we will take it further from there. So just 2 seconds. Who's going to be a monitoring spirit that's commenting in the chat but not sharing? Let's see. Few seconds, let's go. Okay, I'm assuming everybody shared. Hoping you have. If you haven't, hey, I don't know. I do not know. Never monitoring spirit. Botswana in the house, guys. If you're joining for the first time, let me know where in the world you are joining. Always curious. Okay, so let's continue with gold. What are we looking at in terms of gold? So dollar domination, guys. This is what I am busy thinking. Again, I'm looking at an expanding formation here. So I'm looking at the opportunity for gold to short. Again, should we get some positive ISM manufacturing data at 4 o'clock, that will only bolster that position. So you have two options right now, right? Option number one is jumping into a dollar domination short on gold at this particular point in the market, right? And utilizing a stop loss above the previous high. Okay, so that would mean we would need to have a stop loss of $1,820 to an ounce of gold. Okay, our TP would be substantially lower, and then we're looking at about 1,800, which will be a resistance / support level, right? A technical level there. This would result in, let's just see here, you're going to have a 40 pip stop loss to a 160 pip TP. So we're looking at about a 1-to-4 risk reward ratio here, and you can potentially hold that and see what ends up coming of that. Should markets press up and you have the extra account size to deal with that, you can move your stop loss above the last spike, which is let's just see here, it's going to be about 60 pips. We still end up with a risk reward ratio here of about 2.5, so 1 to 2.5, somewhere around about there. Again, if we get that ISM manufacturing data positive at 4 o'clock, that will only boost and bolster your position towards the downside. Okay, so just remember that. Again, I think this fake out or this movement that gold has made topside, obviously the world is obviously quite worried right now about the US pulling out of Afghanistan, but ultimately, guys, that's the US withdrawing. They've spent insane amounts of money. Why they've pulled out after 20 years, only they will know. They've gone in, they've done what they had to do, they're pulling out. The second this may end up becoming bad is if the approval rating for Biden completely tanks and we sit up and we're in a position where, you know, there's any sort of retaliation from the Taliban forces that have obviously taken control of the country. But for the time being, there is no war, right? And if anything, you know, the United States taxpayers' dollars are no longer being spent on war, or at least occupying a different country, right? I don't know what the data was, but it was like trillions and trillions of dollars. I don't even know what Trump will go billions and billions and trillion. Anyway, so that's what I'm looking at on gold, and I'm pretty happy to hold this one long term. Again, TP all the way down at 1800 flat with the stop loss above the last spike over there. So instead of being above resistance 1, we're putting it above resistance 2, because again, we can see that little bit of volatility between now and, let's say, quarter past, somewhere around about there. Moving on, guys, into South African Rand. So I want to talk about this, and I think it's going to be fairly interesting, is if you haven't covered the last analysis of the South African Rand, I mean, the South African Rand is quite classic to look at, right? It almost looks like a Bitcoin chart. 2011, we were sitting at 6 Rand 40. 2021, we're sitting at 14 Rand 47. So if you bought a house 10 years ago for R1 million, and your house is now, the real estate agent came to you and said, "Sir, well done, your valuation is sitting at 2 million rand. Technically, in relation to the rest of the world, your house is still only worth R1 million. You've actually lost R1 million in relation to the rest of the world. So well done on that one, South African Rand. Anyway, you gotta love it. In terms of where we're currently sitting, we've had this massive bear impulse. We've had South African Rand gain a ton of strength since coronavirus, since massive lockdown, right? So since the 4th April 2020, which is where we kind of started to get into lockdown, the South African Rand absolutely blazed with strength, right? We hit an all-time high of 1927, and we strengthened all the way up to the 5th of June at 13 Rand 46 to the dollar. Now, I didn't think we would get that low. There is obviously some fundamental support, diagonal support, that's obviously helping the South African Rand here, visible on a weekly. That's that level over there that we're seeing. Let me just see if I can get that past my face there. Okay, so I'm not 100% sure we are back on the live same stream, or if it's a completely different stream. Give me a second just to confirm what's happening here. Let's just see. Okay, it seems it's the same stream. I just want to confirm on Facebook. Guys, is it the same stream? Please let me know. Would appreciate your comments. Let's see. 47 minutes ago. 46 minutes ago. I can't tell if it's the same stream or not. Let's just see here. Same stream. Beautiful. I love the software. Right, super happy. Okay, let's jump back in. So we just spoke about ZAR. I've got about 5 minutes left with you guys. So let's see how we can wrap this up real quick. So we talked about ZAR. Again, you have to love it, right? We get the highest unemployment rates we've ever received. The South African Rand's like, what do we do? Do we get stronger? Do we get weaker? Well, the world says we're supposed to get weaker because that's what it means, right? And they're like, no, let's get stronger. And that's exactly what the South African Rand did. South African Rand got super strong, went from 15 Rand 34 to, let's see, 14.40. But again, we are now at that 88.2. 88.2 also represents a technical level, so that 1440 has always been that level that I've been very, very keenly watching, just because we've seen a ton of past price action, support / resistance at this particular zone. Also, that level also happens to be the 88.2 fib level, right? So 88.2 fib is where we could potentially see that bounce. Let me just zoom in there for you guys. There we go. So 88.2 is just slightly lower than where we're currently sitting. Now, there is a way to trade this without obviously dealing with all the risk, and that is, again, just pure price action. So I'm going to get this one on an hour just to see if I can isolate everything nice and clearly. Let's see. We should be able to. Yeah. Okay, we're good. We can get this one nice and clear. Right, I'm just going to go to a 4 hour just to get the resistance levels. There we go. Okay, now there is going to be a ton of data I'm going to chop off, and I'll tell you why. There we go. Okay, so this is what we need to monitor on the South African Rand. So if you're trading or want to trade the Rand, this is how I would deal with it if I was you. Again, this little temporary breakout, we can actually see it was a false move based on how markets broke out and then thinned out, tried to stay above, and then that massive re-entry, that massive volume towards the downside coming back into that market tells me that the structure that I've just drawn here is still 100% valid. So what you want to look out for on the South African Rand is a breakout of the 14 Rand 51 to the United States dollar. If we start to see that, we have massive opportunity for a long on the South African Rand. And again, guys, I still foresee South African Rand potentially tweaking. I would say, again, I think we have the legs to beat that 18, 19 Rand to the dollar that we've seen previously, if not breaking that 20 to a dollar mark. I don't think it's unreasonable to think that can happen. We have got a ton of issues to obviously get over with where the South African Rand obviously still currently is. Let me see what time we still have. Let me read those comments while I'm scanning for what else I want to talk about. Let's see here. Bro France, why? Where's Jason? J Pips. Can I have the new name for Jason? It's J Pips from now on moving forward. Let's see here. Oh, yes, I promised you guys we would also be talking about the dollar index. So I think let's also get into that so I can obviously take you through why it is that I'm seeing it do what it do. I think let's just jump straight in. Let's have a look here. Okay, so here's my dollar index. I apologize, I didn't clean up this chart. This is the way I would deal with it and or potentially trade it. So a ton of information there, don't worry. Ultimately, the thing I want you guys to obviously be aware of is the fact that the dollar index is in this range bound market here. Now, we've technically made higher lows and we've attempted to make a higher high, but the range that we're currently caught in means that we are now in a position where the next impulse needs to happen, right? So we're either going to break towards the downside or we're going to start to range a little bit higher. Now, again, this is all going to, I think, come down to, I don't think PMI this afternoon 4 is going to be enough to do it. Certainly NFP potentially Friday is going to be the catalyst to really take the dollar through the roof, or alternatively, we get some underwhelming figures and the focus on the Afghan withdrawal sort of takes preference, then we could see a complete sinking of the dollar. Now, the dollar cannot afford to lose any more than what it currently has. It's in this nice upbeat correction status, and I think any negative data is going to be detrimental. We're going to look at Bitcoin going through the ceiling. We're going to look at gold going through the ceiling. It's just going to be it's going to be, that's why I'm saying I think Friday is going to be a extremely volatile day, and that's why I'm obviously mapping out in my calendar to be live with you as my masters on Friday, so we can see that data come in and see the shift in the markets across the board. Now I will be doing potentially Sunday or Monday, I'll be doing a weekly analysis, which I will then obviously also publish for free. That'll be a much longer session, 2-3 hours, and that's less about news but more straightforward about charts. So if you aren't a masters, don't cry. You'll obviously still have opportunity to understand a little bit more in the coming week from Monday in terms of what the result is of MNFP. But as we can see here on the dollar index, the dollar is certainly in a position where it needs to get a bit more strength, and is I would say a pivotal moment right now. We are sitting above one of the Fibonacci extension levels, right, where we're currently sitting. So not unreasonable to see some dollar strength at the 4 o'clock mark with that PMI data. Again, that would potentially support our gold position, and then would obviously support something like a Bitcoin long, anything of that nature sort of moving forward. So I think that's going to be pretty cool, pretty exciting, something definitely worth obviously paying a bit of attention to. I'm not going to be discussing VIX and NASDAQ here purely because that's going to be stuff that I more want my masters to deal with, in the sense that we are dealing then with much higher pip counts assets and commodities. I quickly want to just have a look here if I did prepare a NASDAQ setup. Oh, I did. Okay, so for my master students, I'm going to share a screenshot with you guys this afternoon once we get that PMI data of both VIX and NASDAQ. And also master students, I'll be sharing my MT5 setups with you. So I'll be sharing with you my file, and you can obviously take that file directly and plug it into your system, and you've got my whole analysis right there with you. Outside of that, guys, I just want to say thanks for the joining. We're going to be having a ton more sessions together again. If we can also get the streaming software working a little bit better, I'll be able to go live more frequently, which is what I enjoy. I enjoy spending time with you guys in the markets, as always. VIX is definitely going to be an interesting one. VIX is still making all-time lows, and where that wants to go, nobody knows, but we obviously are going to keep quite a keen eye on that in terms of its future and what it is trying to do. So I'll keep you guys definitely posted on that. Outside of that, guys, if this is foreign to you, go and watch the DVDM Markets Quantum Growth Series. Again, whether you've never traded in your life before, it's absolutely free. Things that have helped thousands of people around the world learn to extract money out the markets is now at your fingertips, and it's absolutely free. Been a lifelong dream of mine, finally come true. Go and take advantage of it. You can share it with friends. You can do whatever your heart desires with the content, and go ahead and learn. In the content, you'll find links to get into the groups. Within the groups is where we chat about the markets, and then you have options to obviously find out how to take that even further, all the way into the master's level. Now, there will be also some pretty exciting announcements that will be made about an interim level. So for those of you who aren't yet quite fully confident, but you would like daily trade opportunities, you'd like to have these trade opportunities sent to you daily, there will be that service that will be launching, I think, in the coming weeks, in the coming next few days, but that will obviously all be announced within the groups, eventually publicly and through the website, so on and so forth. But guys, listen, outside of that, I trust you guys have learned something. I trust you've had a great time, as I have, and again, we'll be live next Wednesday. I'll be publishing a weekly forecast, which you can obviously take full advantage of as well. And as always, you're welcome to go ahead and rewatch this anytime you wish and share with whomever you wish, as and when. So obviously watch out for some of those opportunities. Watch out for Bitcoin, watch out for ZAR, dollar in terms of gold. I'll let you guys know in the groups if there's any changes to that. Ultimately, I would have wanted to wait for the 3:15 movement, but it was just sitting in a really good position for us to take advantage of that. We may still see a bit of a push on gold further higher. Position your stop loss accordingly, and if we don't see a turnaround by 3:15, then obviously we can manually get out of those trades and look for other opportunities, as always. For the next season of September, guys, my focus is fully on trading, nothing more, nothing less, spending time with every single one of you, as well as my master's students. So guys, if you've had a great time as I have, obviously make sure you leave a thumbs up, you've dropped a comment, you've liked or shared, whatever platform, whatever options your platform allows for. And outside of that, as always, trade safe, guys. Markets are extremely risky, and if you don't know what you're doing, there's a very high likelihood you could lose all of your money. Outside of that, guys, I'm Dane van der Mast. This has been our Wednesday live edition, and I'll see you guys in the next one. Until then, see you later. Shalom.